Fed, but we really held Monday's lows. So in the end, like we just are in a tradable kind of range. Yesterday's dump, like post Fed, was very, very nasty because you get you always get a requisite shakeout. Like, that's something to always, that always happens. Like you get a couple shakeouts. So, what we did yesterday was what we'd call like a dipsy do dunkaroo, where like, you kind of rip up and fucking rip back. Now I thought it was some tricky fucking trading yesterday because, even when the market ripped back down, post 2 p.m., this range right here was so damn big. Like it doesn't look like much on the Qs, but like if you're trading like say individual stocks, that consolidation right after the dump. I mean, this was like, like I was only trading half sizes in this like range here for a second, but even then I lost like $1 twice. A few $1,000 here, $1,000 there, they start to really add up. And then we ended up getting, the kind of monster cock dump that can often happen in these markets. You can see here, right? Like the range at post-Fed, and there's a range for about 30 minutes where the price action was showing that it was going to fade, but it was not easy because you broke back under the VWAP like 3-4 times before finally going in. Now, even with that kind of dump off yesterday, we are holding these lows from the 24th or support from the 24th, really. Like, let's just discount this, little penis that's sticking out under for a second. And we've got ourselves a nice range here from 342 to, let's say, 354. So 12 points. That's a good, solid, God-fearing Christian range right there. We could trade around this a little bit. There is no, like, coming into this kind of market and thinking like, okay, man, we're fucking long today and this is going to be everything is a bounce or everything is a short. On any given day right now, we are in a long, short kind of market. Some days you're even taking a slight guesstimate to figure out which way the market is going. But there's a lot of money to be made in this market. I would say January has been one of the better trading months, like for price action, that we've seen in a long time. 2020 sucked. Like you had to do all this damn research and get up early for pre-market. This kind of market is nice. It's like a vacation. You watch 5 stocks, you get a read on the trend, and then you're ready to go. Hey, Sean, how you doing? I thought I haven't been getting my wedding invitations yet. So I think this is the box that we're in. We'll see what's going on. Now, we have a 1% gap up. The gaps haven't been holding. These days, but it doesn't mean they're not giving you like a tradable kind of quick bounce. So like if we go back to like, say, for example, like yesterday, this is what I mean by like long short. This is the kind of setup that is working, in this market. So like if you see here, like, we had a little bit of a gap up yesterday, and you can't chase anything off in this market. What you're seeing oftentimes, like you get these dips down into the 90 EMA, and then you just end up shredding out for like 15, 20 minutes or, whatever it is that you can get out of these things before you start meandering around. The lunchtime for the last like month, and I would consider anything these days, I would move lunch from about 11 to 1:30. Lunch has been brutal the last like couple months, maybe forever, but the last couple months it's been a little bit worse. But I think on a gap up day like today, that's the setup that you want to be looking for. Now, we've been fading gaps like nonstop for quite some time, but I think that play becomes a little bit more tricky because we're kind of stuck in the middle of this box over here. And so we'll have to see like what's going on. Every gap has been faded off, but like a lot, we are building out some support here. It's not the end of the world. We still are like, classically a little bit oversold. This is bear market trading though. But we'll see, like, if you look here, like on market breadth, you're getting into some of these extreme levels. This is the percentage of stocks over the 200-day moving average. Percentages of, this is the T2108. This is the level of market breadth that is typically in the direction of like, hey, we could get a couple days bounce on some of these bad boys. Once again, that's all a guesstimate though. We have a range here. We just got to trade around and then we'll see what's up. Let's take a look and see if there's any earnings plays. These will have a little bit less, market into them, meaning like, hey, if I get stock with earnings out, it's probably going to do what it needs to do, irregardless if the market chops around inside this box today, give or take. So let's take a look at some of these news plays here. Now, one thing with news plays is, you need in this market, you need liquidity. You don't want to trade any small caps because they're getting knifed everywhere. They're essentially, the money's really on shorting them right now, but they're getting knifed anywhere, and you get wicks and mega penis candles coming out of nowhere. They're just no good. This is an ADS. So okay, so you got now a Citigroup adjust, service now, price target 675, blah 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 blah. Piper upgrade, Barclay upgrade, Mizzou upgrade. So like this is a news play here. Service now shares rise 9%. So like this is something, right, that you got like a little bit of beaten down stock. You're gapping up on earnings. You got 4 upgrades on this thing. It's obviously like a pretty oversold, down over 40% from its high. This is something that if it has like liquidity, and it has none right now, only 40,000, 50,000 shares in volume, that's the type of earnings play that, we want to put on our watch list. I'm going to add it to the list. I don't know if we play this because I don't know if it's going to have the liquidity we need. These $500 stocks, besides Netflix and, Tesla, like some of those higher price, when you get to that level of price, like a lot of them just don't have the liquidity you need. XN, Qualtrade, Q4 loss widened, says sales surge. Welcome to XN. This is another one. Like this is this one's had a chance. It's a former IPO. It doesn't have any liquidity now, but you can see like it's got the upside to it. I actually add this to the list too. I just don't, if they don't fire off like 500,000 to 1 million shares at the open, I'll just leave it alone because we just don't have time to be dealing. When the market shifts so much back and forth, if you're playing in names where you can't get rid of your shares in an instant and then flip short or whatever, flip from short to long, so on and so forth, then you're in for a world of trouble. I've done that at the open with Roku a couple times where it's like, I'm like short and I'm short too many shares. And then there's like a fucking dollar or something spread on it. So then I'm like, well, if I market order this, I'll lose $1,000 on the spread. And then, so then you kind of hee-haw and wait for a second. And then it starts going the other way. And then you have to end up covering for a little bit more than you want to, due to that lack of liquidity. And Roku actually does a lot of volume for the most part, but at the open, it's very illiquid. This thing is junk. YNDX, so this is like the Russian Google. Fuck this thing. For Ukraine, we're not putting this stock on our list. XLNS. Hey, so it's a fiscal 3/4 AGS, quarterly dividend. Now, this should actually have some liquidity, and it's a semiconductor name. This is going to be one of those things. This is going to be one of those things, like if the market can hold up, this could actually, it start to cruise. It could take some of the semis with it. Also, you have NVIDIA and AMD in this. 8% gap in a shitty market is a little bit rough, but let's see how this thing pulls back at the open and see what's going on. And, that's overall having excellent, having this kind of gap up on, earnings and have an earnings beat is going to be good because that'll take some of the rest of the sector with it. So if you see this thing start to cook, right, you guys still got NVIDIA just sitting on the 200-day moving average. Same thing with AMD. We've been trading these back and forth, but they're holding their 200-day moving averages. It's not out of the cards to see these things bounce today. Add XLNX to this. That's like a classic kind of, it's a classic kind of earnings play. I'd only hit this thing if it dips off and you start to hold at some levels. Can't chase this thing up. China market condition, attorney, all stock deal. Oh shit. There's a fucking buyout. Dun, 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 dun. Whatever. We'll keep an eye on it. MYNZ, junk. Okay, so this is Russia. So this is the Russian ETF. They used to have a 3X ETF for this. The Russell. Oh, no, it's only 2x, but it's super illiquid. So pass on that. Yeah. So this is also see an earnings play. Now this thing is like a thick bastard. Blackstone. Just an epic name though, right? If you're gonna have a company like Blackstone's like a pretty manly name, right? Okay. I'm the CEO of Blackstone. That's nice. I mean, that's a lot cooler than be like, hey, I'm the CEO of Roblox, Blackstone, or Pinduoduo, Blackstone. This could work if you like banks. I never trade banks. They just trade too thick. So I'm taking a pass. Hey, Netflix looks a lot like the NASDAQ here. You know, they had some news out yesterday that Bill Jackman or whatever made an investment in this. So you may start to see a little bit of a squeeze over that level. This will be very dependent on probably the market itself too. But this is right. It looks a little bit like the QQQ. You know, sometimes like having these kind of news things out, like when investors come in, is a good spot. You can't chase an 18-point gap up like in any, 3-4 months ago, you could have. You come in hot on an 18-point gap right now, you're going to get faded for a little bit, and then you have to see. So this is something that actually can work. You're going to need a pull on this quite a bit, probably 9 EMA, 20 EMA. You want to see where it holds, and then we take a little gander on this. This is really the first day we've seen in this earnings season where there's actually some news plays that are holding up. Mr. Jones, I'm going to take a look at that SSRA in a second here. QS, chunk. Now I can't play this because this is like goes against the laws of, the laws of chivalry, which indicate that, I'm just not a candidate to be trading these according to the virtuous laws of the first knights of the realm. But this is, you have to trend on it. Like you can trade this, it's got wicks everywhere. So you'd have to watch your size. But there's no reason you can't trade it. I don't like these. I hate stocks with wicks because sometimes I just oversize on these things. Like, when you have if you have 4,000 or 5,000 shares of these things and, you end up like wicking out, it just takes one to like really just pee in your coffee at that point, right? It's like you can have this epic thing and then you get these wicks come in and you see how these profits disappear. So not my personal cup of tea. But the pattern is there, and it also was moving clean enough. As long as you watch your size, I can't personally trade it, but it does not mean that I don't wish you well on it. Go for it, my friend. Go for it. Mr. Terry, man, why is it so damn cold these days? All right, let's take a look on the downside, see if we got anything. Flowers.com. This is a fiscal adjustment decline, revenue ground, blah, blah, blah. Flowers.com. Hey, this is your classic. Like when we look for like things that have like miss on earnings and stuff, like this is like your classic short setup. Now it's down like 30%. So there's really not much we can do on it right now. But like this is probably something like, if it ended up popping, you could really kind of roll with something like that. I'll come back to that though. Teradyne. See, this is another one that's a little bit more our speed here. Top consensus, outlook lags, estimates, stock slumps. Like you can't short this into the hole because the SSR will be on it. This is another one. Like if this thing pops up, both of these bad boys, I wouldn't give either one of these like an A in terms of setup grade, but like I would give this a solid B minus. It would be an A minus, like if the gap was at like 8%, but at 20, it gets a little bit crazy. And then of course, like there's not that much liquidity. LC, Wedbush's price target, and they miss on earnings, profit, revenues rise. That's the thing with this market, right? Like your profits can rise, your earnings can go up, but it may not matter. It may not matter because we're just in that kind of liquidation, right? We're in that kind of liquidation station right now. This is nice. I think this is probably another one. Like it's already down 20%. If this thing kind of squeezes up a little bit, we are in a liquidation market right now. So like all these kind of stocks are going to be getting punished. I would definitely add this turducken or whatever it's called. I would add that Tur and LC to the watch list. I don't know if it's 6 window. I don't know if it's sponge worthy, but it's definitely did they change something on E-Trade Pro today? Why? Why are these installations happening? What the fuck? Okay. Something. Whoa. Sure looks a little different. Thanks. Okay, Andrew. Yeah, somebody else said that too, but it looked like the earnings came out too. I didn't know what was what, but you're right. Chunk. All right, cool. So let's go back through these. Right, we got now. We've got XLNX. We got turducken. SRRA is not for me. That's for Mr. Jones. We got LC. I mean, I really wish these things didn't gap down so much. If any of these damn things were down even like 10%, we'd really have ourselves some fun. Fuckers, you know, they just can't let us have any fun these days. Groupon, let me look, buddy. Yeah, why not? You know, why not? Fuck. Let's add that. I don't know who squeezed the titties on this one, but why not? Now this is up 4 days in a row. So you can only hit something like this, you know, with like a really, really clean entry. I should say 3 days in a row. Today would be day 4. So just be kind of a little bit mindful of that. I actually, you know what, Andrew? Every time you come up with one of these, it just makes me think of you introducing me to that new share song. Now you've outdone yourself here. This is a good setup here. Keep it alert. 2850. I think we shred. Let's take a look. Let's add UPST to the list too. You do have some clear levels here that you'll have to kind of trade around. But yeah, you kind of stalling out. You're right at that 9 EMA too. If you can clear that, I think that should be fine. I would prefer, you know, something that's ignoring a little bit more support like MU. But I get it. In this market, like if the market starts to bounce, the ones that are like the most oversold, like Affirm, that's going to be really Affirm and UPST. These are going to be the SC. These are going to be the ones that really bounce the best because they just are. They've been the one that's pummeled the most. You know, you can't go from 200 or 40 bucks and not have like a good squeeze somewhere in it. At least like you can see here, Affirm's done a lot of pops into the 20 SMA. It's like, you know, you can still get, you can rip 20, 30, 40. I mean, this is a 50% bounce, give or take there, right? That's like 60 points, 40 points. You can get like a 10, 20% bounce on a lot of these sometimes. Keep Affirm on your list. Also UPST, you know, you can do your Robloxes and stuff too. I mean, you have like a clear level. Today, you got to be prepared to be flipping long short. You know, if you don't want to be flipping long short, then you play these earnings plays because they have earnings out, fresh news out. Their order flow will be independent to what's going on in the market. If you want to be just sitting there staring at the indexes and kind of moving around with it, then, you know, you could trade all these like kind of tech stocks. You've got your TTDs, your NVIDIA's on support. You got UPST at a level, Rivian's rounding a little bit, right? These things are, frankly, they're all bear flags also. They're like mini rounding patterns that could be turned into bear flags in a handful of days. If we do need a short, you know, Armand is right. Like this Lucid is at a big breakdown level here. I think this one's probably got, I wouldn't say big breakdown level, but it's at a breakdown level. You know, I hate when they grind into that, like a little bit like that, into the breakdown spots. It usually tells me like you need a couple inside days to get it going, but I'd add it. Do it. Hey, on the other side of things, guys, on the crypto side, I believe it was Sandbox had news out with Warner Brothers. It's ripped like a decent amount already, but watch that thing for pullbacks. You know, if the market starts to hold, I think that'll be the one. You know what? And that one's had a series of news pieces on it. If we need some faders, by the way, look, Baba is still weak. PDD is still weak. Like we can do second day shorts on this, on both of these, without really having to, like, you know, even if the market goes up, it looks like probably, you know, we've got some clear levels on this one. You know, like even SQ over here is like, I don't know what the fuck's going on with this thing, but like it's only stock not gapping up here. So that could be something. So we need a short. I think we come in on this SQ, and then we can come in on the BABA, you know, PDD. Those will give us some clear levels. Because like I like when you're kind of, you can see like these things are really opening up weak over here. You know, so they're not even really rising with the market. This BABA's getting shredded yesterday too. I didn't see the news on it, but I mean, there might not have been. PDD, same thing, like it gapped up. Total, right? Total trend on this. You know, that's one of the things too. Like if you're really thinking this is like, if you're having trouble trading in this market, you know, try to go back and look at like all the different stocks that are trending and try to reverse engineer where, you know, you're getting in your entries and stuff. Like some days you might sit there and be like, oh, the market's so choppy. Well, the market was choppy, but this thing won't choppy, right? This thing wasn't choppy. So that's where it always goes in. Sometimes we can get so in tuned into like banging our heads against the same stock over and over. And then you will sit there and be like, oh, the market's choppy. And it's like, yeah, but is it? Like there's other things you can trade, right? But we just get conditioned a lot of times to want to do the same thing over and over. And I'm very guilty of that myself. But there were, even when the before the Fed and like everything, right? This thing was trending, right? This thing was trending. There were things happening. So we got something to be mindful of. And yeah, you know what? NVIDIA has been a very tricky trader. It's almost got too much range. You got to watch your style and you got to watch your size on that. You know, you're talking 100, 200 shares max is really all you need when you're trading something like that. If you have a smaller account, if you have a bigger account, you know, whatever, 400, 500. I mean, you could take it up to 1,000 if you're really feeling randy, but like, I don't know if you really need more than that. Cool. That's the list, guys. I'm sticking to it. There's a lot of money to be made in this market, but it's not always the easiest. So, you know, just be mindful, don't be too hard on yourselves. For a lot of you guys, this is the first time you're really seeing this type of action. And it's easy to like beat yourself up on days like this because you see the range. And when you see so much range, you're sitting there thinking like, well, if I just took this in here, right? We always think of the best case scenario. You're like, oh, I would have made so much money. But like when you do have that kind of range, it also means it's a little bit harder. You get stopped out a lot more. You get shaken out a lot more. It just requires more focus, more skills. And for a lot of you guys, this is the first time you're really seeing this kind of action. So just, you know, keep at it. We'll see what we do. Also webinar tonight. So I'll see you all in there too. Let's go do what we do, which is the do. All right. Dun, dun, dun. I'm gonna grab some water. The 6 window. Oh.